Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 6th day of July, 2017, and this is the Daily Report for Gold and Silver. After watching markets decline, specifically gold and silver prices, last 2 days, although modest gains, we have seen gains over the last 2 days, with gold closing up about $2 at $12.24 and change. We'll look at that one as we pull up our first price sheet. Really, the most important thing that we're looking at is the fact that Fed minutes were released from last month's FOMC meeting, and as analysts and market participants digest and glean the information available there, we're starting to get an idea of the inner workings of the Fed in terms of their current thinking on policy. And what we are seeing is quite interesting because we are seeing an absolutely divided Fed, and that can lead to some real uncertainty, and it could be beneficial for gold. We'll talk about that as we pull up our first chart. So traders, we do have an active trade on. We'll talk about that in a second. But in terms of gold pricing today, settlement up about $3 on the day. We're looking at most active August contract at $12.2470. Net change is about 0.25%. Over to silver. Silver gaining 0.75%, closing up about 12 cents and breaking back above $16 on the day. So I find that pretty interesting. The other thing that we do want to look at, of course, is October, because we did suggest entering a position in terms of October gold for longer term trades, and that closed up about $2.80 at $12.2810. And then lastly, want to look at the dollar index, because the dollar index really has provided some pretty dynamic headwind today. As we take a look at it, it has given up approximately 0.5% on the day. So traders, although we did close higher on the day, we did close lower than the market opened. And that's why we're getting this small red candle here. You can see that reflected in this candle, whereas yesterday we had a small body size and it did close higher, but it also closed higher than the open. That's the difference. But we've had now 2 days with the market trading to higher highs. We are long. We entered the market yesterday roughly at this area, 12.25 if you're in the August. If you're trading October contracts, you got in roughly at 12.29. Stops are below 12.15 for the August and below 12.20 for the October contract. The key level, and that's where our stops are, and that's what I kind of wanted to talk about, but the key level is obviously this low that was achieved back in first week of May of last year. Let's kind of highlight that. And so this low, we're basically at a double bottom, but it is absolutely critical that the market hold this level. And if it can, I do believe we should see a pretty substantial bounce in the market. Now, the different target areas that we're looking at in terms of where we'll find minor and major resistance is first our 78% retracement level. And that, of course, is a retracement of this long rally back in May when the market moved from about 1213 up to 1300. That would be our first area and target. The second target and area that we want to be cognizant of if the market continues to rise is going to be derived from the 200-day moving average, and I believe that that's going to be minor resistance. And then we start coming to our 61% retracement, and that, traders, is where we could see some substantial resistance, at least greater than these lower levels. First, we do have to really come off of these lows. We have to confirm that we have hit a bottom as this market traded to over the last couple of days and is moving higher. Therefore, my suggestion is to maintain our current long positions as well as our current stops. So traders, in terms of other markets that we look at, we spoke briefly about the dollar, but it's been U.S. equities that have really come under dramatic pressure. 21,320, that is our current print when we look at the Dow Jones Industrial Average. Triple-digit sell-off today. These are weekly candlesticks. Market closed off by about 158 points. A fairly substantial move. When we look at the Standard & Poor's, that also gave up some ground, but you can see in terms of the candle size, it had a much more dramatic effect trading off almost a full percentage point, losing 22 points at 24.09. And the NASDAQ Composite, which had been the little darling out there performing exquisitely, has really been under the greatest amount of pressure, breaking below 61, now trading at 60.80. You can see these last 2 days have been a tremendous downside surge. And we've got the car maker Tesla giving up tremendous ground, I believe $50 per share over the last couple of trading days. Lastly, I do want to take a look at the dollar, because although the dollar traded off today and closed off by about 0.5%, it did recover from its open, and that's why we're getting this small green-bodied candle. What this looks like after having this large down red candle, this really would be a shooting star if it was found after a defined uptrend in the market, such as this uptrend. If this particular candlestick was found here, we would label it as a shooting star. However, if it's found after a defined downtrend, it is simply called an inverted hammer. The key to the umbrella group of candles, which is composed of a shooting star, inverted hammer, a hangman, and hammer, the key is the tail size. And the fact is that you make an extreme high, or in the case of a hangman, which is really the opposite, something like this, if it had a larger body, is the extreme range to a low. On an inverted hammer and a shooting star, it's extreme range to a high before coming down. But the key is that it closes very near the open, and the tail, the wick, is at least 3 times the length of the body. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.